Welcome everyone, and thank you for joining the webcast. Today we are talking about the Canadian Emergency Wage Subsidy, what it means to you and your business, the calculations in order to qualify, and how to fill in the actual spreadsheet, including some common mistakes that we've seen so far. Helping you through the process today, we have Justin Mastrangelo, the Central Tax Leader for Automotive, David Elric, Western Tax Leader for Automotive, Nick Katibel, Alberta Tax Leader, and myself, Shane Weimer, National Automotive Retail Leader. But before I turn it over to Nick, if you have any comments or questions, please add them to the box, the question and answer box, and we'll do our best to get them answered. Nick, I want my $847 a week. Show me how to get it.
All right, you've got it. Thanks for the introduction, and hello everyone, and welcome to the webcast. Thanks for attending. We're going to spend about 30 minutes going through the presentation. It might be a little bit longer than that, and we're going to spend the balance of our time going through the some questions and some questions that you guys might have for us. 5 items being covered today. I'm going to take the high-level program overview and pass things then on to Dave, who's going to go through the application process and some pretty frequently asked questions that we've been getting. Justin's then going to go through some examples and the actual calculation. But before we dive in, I wanted to share just a little bit of information that you might find interesting and maybe somewhat useful. First of all, this program is going to cost $73 billion at a very minimum for the federal government, so for us. And as a result, there's a lot of speculation as to what this means for tax rates, what this means for a sales tax in Alberta, and definitely a big subject, what it's going to mean for capital gains and inclusion rates. I'm not going to comment on that so much, but I would not be surprised to see some rate hikes. This is going to have to be paid back somehow. The government is expecting 1 million applicants into this program, and the money is going to start to flow. They've stated on International Star Wars Days, which is May the 4th next week. The maximum benefit is actually just a little over $10,000 per employee. It's not the $58,700 that it might have originally sounded like when they introduced the program. It's $10,000, so it provides for some easy math when you're trying to figure out how much this is going to result in for you. Overall, there's actually no maximum. There's a maximum for each employee, but there's no maximum from an employer perspective. It's not going to get capped out at $1 million or anything like that. The government has stated that they expect employers to make best efforts to top up the employee's salary to pre-crisis level. But it's important to note is that is not a legislative requirement. That was not embedded in the legislation, and that is truly just an encouragement. You cannot be penalized for not doing that. But on that note, they also did embed something in the legislation which people are referring to as the name and shame provisions. Embedded in the provisions is the ability for the CRA to publish the name of every single applicant in this program. And so you do have to think about what it means for you. And they have actually gone on record saying that they plan on publishing the name of every single applicant under this program. So definitely things to avoid are artificial transactions, shifting revenue between months. Absolutely stay away from that. No funny business. You can't have any known errors or omissions, and if you do, there are going to be extremely significant penalties that you're going to be subject to. And if you do have a provider that's helping you with the submission, there are going to be third-party penalties that could potentially apply to if the third-party provider should have known that the error was there, or if they did know. So I'm going to dive into the 4 key criteria that need to be met. There's actually more criteria than the 4, but we've tried to bunch things into sort of simplified categories for you just to make this as understandable as possible. And we're going to start with eligible employer. Eligible employer, in order to be one, you need to be both an eligible entity and a qualifying entity. Eligible entity, that's easy. You just have to be a corporation or an individual or a partnership or a trust. And so that basically covers all taxable corporations, whether you're public, private, foreign, domestic. Even if you're a non-resident corporation, but you're doing business in Canada, you're going to be eligible under this program if you have eligible employees in Canada. There are others that qualify as well. We're not going to get into those because they don't really apply to the auto industry. But I do want to point out a couple traps on the non-qualifying entity side of things. Partnerships, for example, could be a tricky one because you'll qualify as a partner as long as all the members are qualifying. So if you have non-eligible people inside the partnership, that could actually throw you offside. And might not be that common in the auto industry, but if you have pension funds, Indian bands, or other tax-exempt entities that are involved or members of the partnership, that will throw you off. Also, I have seen tiered partnerships before in the auto industry. Tiered partnership structures are going to be offside, and then public-private partnerships are also out here. So that's eligible entity, and again, you need to be both an eligible entity and a qualifying entity. Qualifying entity is a little bit trickier, but the first 3 points are easy. You need to submit your application by September 30th. Nothing submitted in October is going to apply. They're going to shut the portal down. The person principally responsible for the financial activities of the business must sign an attestation stating that they confirm the information to be accurate and complete. You can't omit things. And the third easy one is that, well, you need to have a business number, and that business number needed to be in place on March 15th. That's relevant for paymaster organizations, like larger groups that might have, say, 10 entities, but only have one entity that has a payroll number. Well, that actually means that you're only going to have one entity that's submitting this claim. All right, so that's the eligible employer one. Again, you need to be an eligible entity and you need to be a qualifying entity. And please, I encourage you to ask any questions on this one in particular. Now, qualified revenues is where we're going next, and it's the biggest one to unpack for us. And so we're probably going to spend the most of the time that I'm presenting talking here. There are basically 4 conditions, and then there are a bunch of exceptions. So we'll start with the conditions first. You start with revenues from ordinary activities. Well, actually, I'm just going to be clear. The qualified revenue test is applicable because this is how you're going to calculate the revenues that you compare to your prior reference period to determine if you meet that revenue decline test. So you start with your revenue from your ordinary activities, but you exclude any expenses. This is a gross revenue test, not a net income test. And you can't even net any expenses against your revenues because that'll sometimes happen where you're looking at net sales. Anything that is considered an expense or an outlay cannot be netted against revenue because it does not meet the definition that was provided in the legislation. So be very, very careful about that. And I really want to emphasize any expenses or outlays can't be included. So you start with that, and then you back out any extraordinary items. You back out non-arm's length revenues. So anything that you're earning from a related party would generally be excluded there. And then you also back out anything that you've already received under one of the 2 wage subsidy programs, because remember, there's the 10% wage subsidy program as well. So let's look at this whole revenue test. How do you calculate your revenues? Well, you use your normal accounting principles. And that actually opens the door because you might have multiple accounting methods. You might use both the consolidated approach if you're reporting at that level, and then you might also, well, then automatically, if you're a corporation, you're going to have to file a T2, which means that you're going to have separate entity financial statements. So that means you have some choice there. You can use the cash basis, or you can use the accrual basis. So entities that do cash flow statements, it might be a little bit easier for those entities than it will be for other entities that don't do cash flow statements, but the option's there. It does require, however, that you file an election. And make sure that you understand that if you choose to use the cash basis, that you're bound. You're using the cash basis for every eligibility period that you're applying for. If you have any, maybe a little obscure, but if you have a change in accounting policies in 2019 or 2020, beware, because it's not going to be considered the new policy is not going to be considered your normal accounting period. You're going to have to look at the pre-change accounting methodology and just make sure that you're not comparing the revenue in the current period to revenue in the prior period, the reference period, with 2 different accounting methodologies. because that would put you offside of this normal accounting principles concept. What are ordinary activities? Well, it's not defined, unfortunately. It'd be nice to have a little bit more guidance there. But there has been some debate, and there is now a consensus on where things have landed. We don't need to get into too many details, but the largest item on there, if anything, is on account of capital. If you have proceeds of disposition, that's going to be excluded. Generally, anything under the earnings before income taxes line, that's going to be excluded because it's usually going to be not an ordinary activity. But definitely, CRA has gone on record saying that anything that you would report on your tax return on account of capital is going to be excluded from what's ordinary revenue here. There might be other weird stuff like lawsuits, settlements, discontinued operations, other comprehensive income that's relevant for the business. Those would also generally be excluded. So the big one up there, definitely, I would think, is the non-arm's length revenue test that could throw you offside. Now, let's start looking at some of the exceptions to these rules here. So it has been clarified that if you report your accounting on a consolidated basis, that you can choose the separate entity approach if you want to. So you can either go for every entity, you can look at your revenue on a consolidated basis, or you can use a separate entity basis. However, if you choose to use the consolidated basis, you're doing that for every entity. If you choose to use the separate entity basis, you're doing that for every entity. That is 100% clear and an easy trap to get mixed up in. On the other hand, if you only file on the non-consolidated basis, then there is an election you can file to calculate the revenue decline on a consolidated basis. The trap there is that it's not a consolidated financial statement for accounting purposes. It's consolidating all of the affiliated entities, and affiliation is determined based on income tax legislation. So what might be a consolidated entity for accounting purposes could very, very well be a different group of consolidated entities from an affiliation perspective. So you have to be particularly careful there. What about entities with no revenue? Well, if you don't have revenue, then you cannot file under the separate entity approach. That might be relevant for paymasters, for example. In that case, you're looking at either the consolidated method, if that's how you regularly report your financial statements, or you're looking at the affiliated consolidation election that I just talked about a second ago. Non-arm's length is going to be a huge hurdle. And the good thing is that we're not out of the wood. There are some ways to get out of here. There are lots of entities out there in the automotive industry as well, integrated businesses, centralized service providers like head offices, paymaster entities, fleet entities, rental entities that are going to have a lot of intercompany sales. Those intercompany sales would, without any exception, be excluded from the calculation of qualified revenue. But there are two outs, the first one being the consolidated basis. Like I said earlier, if you're reporting on a consolidated basis for financial statement purposes, you can do that, but then you're bound. Or you can elect to report on a consolidated basis, and then you're looking at the consolidated group of affiliated entities. So that's the one out, the consolidated basis. The second one is you can file a special election to look through. So say you're an entity and your sales are all coming from non-arm's length sources. Well, you can look through to the entities that you're providing those non-arm's length sources to, non-arm's length revenue that you're receiving from, sorry. And you can then calculate what qualifying revenue is at that level. It's not as simple as I'm making it sound. You actually do need to have, first of all, 90% or more of your income coming from non-arm's length sources or gross revenue.
Nick, just to interrupt you, it doesn't sound simple the way you're explaining it.
Oh, I screwed my blanket. Yeah, well, I appreciate that, but I'm not going to get into the calculation. Does that make you feel better? So the emphasis I wanted to add, Shane, thank you for that, is that you're probably going to want to be careful when you're doing this, and I do recommend you talk to an advisor before you're just jumping into filing this election. So before we move into the revenue decline test, large organizations have options. So maybe hold off, if you can, on filing this. And the reason I say that is because you want to maximize the subsidy that you're claiming. If you have multiple entities and multiple periods that you're trying to be qualified for, because there's so many different ways to skin this cat. You could report potentially under IFRS and US GAAP if you're doing that. You could use the consolidated or the non-consolidated basis, cash basis, the accrual basis. You could do the affiliated election. You could do the look-through election. There's so many different iterations of what you could do here that you may want to wait until you're through a couple periods before making the decision on how you want to file this. And if you can cash flow this, then that might be the best decision from a strategic point of view. So if we can move on to the next slide, I'm going to go into the revenue decline test here. All right. First point, claim period, not the same as reference period. Claiming period is, for example, from March 15th to April 11th, but the reference period that you're looking at is March of 2020, and you're going to divide March of 2020 revenues by March of 2019 revenues, and if you have a decline of 15% for that month, for that reference period, then you're good to go. Well, what if you don't want to take March of 2019 because whatever, you don't need a reason. Well, if that's the case, you can actually compare March of 2020 to the average of January and February of 2020. You actually need to file an election if you do that, and you need to keep the election on file, and then you're bound. Once you've chosen to do the comparing March to January, February average, you have to use the January and February as your prior reference period for the rest of the eligible periods that you're making a claim for, so be careful about that. There's one exception. If you didn't have a business on March 1st of 2019, you don't need to file an election. You're just automatically allowed to use the January and February average there. So, yeah, important to, you can't do the flip-flop. You can't choose the January, February comparative period and then switch it for a subsequent one. But you can flip-flop if you didn't have business on March 1st of 2019. I'm getting lots of questions on this automatic eligibility. Very important point, and nice relief that was provided by the government. If you qualify in one eligibility period, you automatically qualify for the subsequent eligibility period. So if you meet the 15% revenue decline in March, well, then you're eligible for the subsequent, the period 2. And likewise, if you meet it for period 2, well, then you automatically qualify for period 3. So that was definitely some nice relief there. You still have to submit a claim, but you're just basically guaranteed access to it in the subsequent period. One trap is that you have to be careful about what a legal entity is. If you have undertaken a corporate reorganization, such as an amalgamation, say on January 1 of 2020, well, legally you've created a new entity for income tax purposes, and so you will not have had income in the previous year because the entity didn't exist in the previous year. In that case that I use, the January 1 amalgamation, you're going to have to use the January and February 2020 average as your comparator. And unfortunately, they don't have a way out of this. If you've amalgamated, say, on March 1st, well, then you will not be eligible from the looks of it for the subsidy application because you will not have had an eligible entity that existed prior to March of 2020. Extra periods. Oh yeah, embedded in the legislation, they have provided the ability to add additional eligibility periods without recalling Parliament. That's really nice. We don't know if they'll do it. I suspect it depends on how successful the program is in stimulating the economy. So definitely a nice thing. If we
Nick,
can go
just to stop you there, there's a couple questions coming in here.
Sure.
Do you have any advice on how to calculate and apply for semi-monthly pay cycles? Jay, we're going to go over those a little bit later here in the presentation. So, and we'll do a calculation in Excel like you guys will have to. And Nick, does the CRA distinguish between vacation pay versus regular pay? If not, do you think it's probable the government may change their stance on this and limit the wage subsidy to regular pay only?
No, I do not. Vacation pay would be included. I do not believe they will change. They're pretty clear on what's eligible remuneration and what is not eligible remuneration. And I'm actually going to go over that in a little bit. But to answer that question, I do not think anything is going to change. And certainly it would be not equitable for them to change it after they've already had so many applications under the program. All right. Can we go to the previous slide, Justin? Shane, any more questions there for me to go through?
No, not right now. Okay. I just want to reach out to all the people on board. If you do have questions, just ask me, and we'll get the presenters to answer your questions.
Okay, eligible employees. This is a really easy one. I'm going to buzz through it. You're an eligible employee if you're an individual employed in Canada. You do not need to be a resident of Canada. You can be a non-resident. You just need to be employed in Canada, so you're getting a T4. You cannot be in any eligibility period. You cannot be not working for 14 consecutive days, and so that could be a problem for laid off and furloughed employees. So if you're not an eligible employee, you're disqualified for the entire period. You don't get to claim periods week 1 and week 2 if you were laid off in week 3 and week 4. We're going to go through that in the examples. Owners and arm's length individuals are qualifying individuals, they're eligible employees, but there are some traps to watch out for there, and I believe Dave is going to be going through some of that in the frequently asked questions and examples. Eligible remuneration includes wages, salaries, commissions, vacation pay, employee benefits. There's a debate over whether taxable benefits on employer vehicles should be included in that. The CRA says no. The legislation indicates basically yes. So I don't know where we're going to land on that, but if you want to stay on the safe side, you would exclude that. But I would say legislatively, you could probably be fine on that. What does it exclude? Well, it excludes basically retirement allowances and stock option benefits. Those are the two big ones. And contractors are not employees, so they obviously don't qualify as well. So could we go down 2 slides now, Justin? So this is my last slide to go through here. This is how you calculate the amount of the subsidy, and it sounds easy, but it is trickier than you might think. Essentially, you're taking the greater of 2 amounts, but the maximum is $847. And then our subsequent presenters are going to be going in more detail about this. Baseline remuneration obviously forms part of the calculation as well, and that represents your average weekly earnings from January 1 to March 15th, excluding any 7-day periods where somebody wasn't employed. And then non-arm's length individuals, you're not going to qualify if the non-arm's length individual was not employed prior to March 15th. So owners and certain family members, if they weren't working prior to March 15th, they're not in a position to make a claim here. Last point before I hand things off to Dave, anti-avoidance rules for modified pay will also throw you off on the calculation of the subsidy, so avoid any funny business there. All right, thanks everyone. That was the overview.
Thanks, Nick. Hey, I've got one more question here, and I think you just went over it. Stacy asked, what is revenue, total sales, which can be a lot for car dealerships? And Stacy, if you want to get back, if we answered your question already, if not, get back and ask the question again.
But to answer that really quickly, yes, it would include your total sales, but it could include other things as well.
Great. So I'll jump in and walk through the application process, some of the stuff, and then some frequently asked questions. So the process itself, there's kind of three options here. Option number 1 is applying through CRA's My Business Account portal. So if you're already set up on the portal, this is the easiest way and the way I would recommend you go through it. If you don't, you can request to open an account. An authorized person can, and that can give you access to the portal, and you can do it that way. So if you haven't already, I would request to open up and get access that way. It'll be easier, again, even in for subsequent claims. Option 2 is through represent a client. So that could be either your advisor. So BDO may have access. So BDO could make the application on your behalf, or if you have your internal staff who you set up as through represent a client, they could as well too. And finally, there's CRA for people who aren't connected through CRA's online account like that. There is a special CRA online web form that you can use to do that. So there's a web-based application. you do need, just for security purposes, you need a web access code. You can apply to get that. You'll just need to have some of your information available from your prior year filings to get that. So to kind of authorize you and give you the web access code, they'll ask you some questions such as total income tax reported in box 22 of the most recent, say, your 2018 T4 summary. So what information do you need before you start making your application? So one of the key points, as mentioned by Nick earlier, is everything relates back to the payroll account number. So it's the entity, it's each entity that has a payroll account number. It's paying payroll is the one that makes the application. What information do you need? Well, line A, you're going to need the number of eligible employees, total eligible remuneration paid during the period, calculation of your Canadian Emergency Wage Subsidy. So that's the Excel spreadsheet that CRA has prepared. Probably many of you have seen it. If you haven't, Justin's going to run through that later, so you'll see a live example of how that's calculated. Then you need to know employer's EI, QPIP premiums payable on salaries paid to furloughed employees. Same thing with CPP, QPP on furloughed employees, if you have any. And then this is one that can trip people up. So the 10% temporary wage subsidy. So this is the piece they first came out with. It only applied to smaller businesses. So you could apply for the 10% wage subsidy. And then they brought in the new process here with the 75%. However, you're actually required to claim the 10%. So if you're entitled to the 10%, you have to claim the 10% and the 75%, and the 75% gets reduced by the 10% to give you a total of 75, but basically 65/10. And you can't, if you haven't done the 10%, but you qualify, you can't just skip ahead and say, well, I'll just do the 75% and get it that way and save my time from filing it. You're actually deemed to have have made that application. So whether you actually applied for the 10% or not, if you're entitled to it, your claim here is going to get reduced by that 10%. And then if you're part of the work sharing benefit program, that can actually reduce the amount you receive, because if you're getting essentially government support there, that will reduce the amount. So if you're part of the work sharing benefit program, that comes in here, line 6. And then finally, line 8, it'll just automatically calculate the entitlement there. Next point, so the attestation form, Nick briefly talked about this. So essentially you're signing off that the information in the claim is accurate, and there are potential penalties for false representations. So the form itself, you don't actually file at the time you make the claim. You print it out, sign it. You can also tick some boxes relating to various elections you might be making on there. But you basically hold that at your office, and then when CRA starts auditing these, they'll say, please, one of the first things they'll ask for is send us your attestation form. You'd send it to CRA at that time. The last point, and you'll probably hear this come up a few times, consistent elections and forms should be filed for the entire group. So again, you don't want to be playing around with things. Certainly figure out what basis, so consolidated, non-consolidated, some of the other choices you can make. Figure out cash or not, accrual basis. Figure out what's the best, for you. It can give you the best results, but then you have to, again, you're kind of stuck sticking with the choice you've made, and keep a consistent approach. Now we'll talk about some of the frequently asked questions that come up.
David, before you get into that, we have this question again. What is total sales? Is it total, like, what's revenue? The total sales, or is it the total gross after cost of sales, like gross margin?
It would be your gross sales, or like your gross sales number is what I would report on there. Like basically, you're going to pull it from your accounting, what you're recording in your accounting record. So assuming you're doing the accrual basis and not the cash basis, you're going to go with your gross sales.
Yeah, just to be clear too, if you actually have netted outlays or expenses against anything in your gross sales, those are not considered to be part of the definition of revenue. So you would not include anything that reduced your sales.
So it's top line sales, is that what you're saying, Nick?
Yes. Yeah, gross sales.
Yeah, top line sales numbers. So on to some of the FAQs. So can an eligible employer claim the wage subsidy for an employee that the employer hires back and pays retroactively? And the answer is yes. CRA has actually said that's okay. So you could hire somebody back that you've already laid off, and then pay them retroactively and claim the wages, claim the subsidy for the wages paid. The one thing you have to be aware of and watch out for here is if the employees claimed the CEWS, which is the benefits that individuals are able to claim when they get laid off because of COVID. So if they've been claiming that and receiving that benefit, they would have to, if you pay them retroactively, they would have to refund that to the government because now they've been paid for that period, so they're not entitled to the CEWS, so they'd have to pay it back. So you just need to be aware that that's going to happen and make sure the employee is okay with that if you're going to be doing this retroactive pay. So 2, calculating the wage subsidy, should I consider wages paid or like actually paid or wages paid in respect of? So this is one that comes up a lot, and actually CRA just published, as of last night, published some additional guidance on this, which was helpful. Kind of confirmed our thinking on it. And this comes back to one of the questions somebody had asked about semi-monthly payrolls. So it's really paid in respect of. So if you have, so whether it's depending on the timing of your payroll, or if you're paying, say, commissions or bonuses, you take it, you go in respect of. So if you have March and the employees working for you in March and they get a bonus in April, say April 15th for the sales, the cars they sold in March, well, that April 15th payment, again, is in respect of the work they did in March. So that would be part of your March payroll related to that person. Again, same thing if you have, again, the question was on, that came up in the box was on bi-weekly or bi-monthly payroll or bi-weekly payroll. So if it falls offside, you have to figure out what portion of that pay related to, again, March or April or whatever period, and that's the amount you put in there. The one key though with this is when you're making the claim, you have to have already paid that amount. So although it's in respect of, although you might be paying somebody on the 15th of May and it's in respect of work in April, well, you can't claim that amount until you've actually paid it. So you can't claim that amount as paid for April until you've actually got till May 15th or May 16th and you've actually made the payment. So the payment needs to be made to claim it, but it's claimed, again, in respect of the period it actually relates to. So 3, can an eligible employer claim dues in respect of eligible employee who has received payments under the CEWS? Kind of relates back to question 1. Yes, you can. If you did, say, a retro pay, it may be clawed back. So depending on the timing of the payment, some of their CEWS could be clawed back if they now subsequently don't become entitled to it, or you hire them. Again, they've made the claim and they pay that claim sort of ahead on some of it, so some of it may get clawed back from them depending on the timing of it, but you certainly can. There's also a bit of a weird rule here where if they're getting paid less than 1,000 a month, like if you had somebody who's working part-time, you can actually double up. Generally, you're not allowed to double up. That's what they're trying to look for. They don't want the employer getting the CEWS benefit and the employee getting the CEWS at the same time. But there is a bit of an ability to double up if you're paying somebody to work part-time, so that they're making less than 1,000 a month. They could actually be getting both at the same time. Baseline remuneration, Nick already covered that, so I won't go over that that question unless another one comes up in the box. Number 5, will it be eligible for both CEWS and the 10% temporary wage? Again, yes, as I ran through earlier, you're actually essentially required to claim the 10%, otherwise you lose out on it. So definitely you can be eligible for both. 6, can owners and non-arm's length employees claim the wage subsidy? So Nick had talked about this a little bit. So basically the rules for non-arm's length employees are more strict than they are for arm's length employees. The key with the non-arm's length employees is were you paying them during that the baseline period, so January 1st to March 15th. If you weren't paying that non-arm's length employee wages, then you're out. Just doesn't matter. It doesn't matter what you do. You're out at that point. So you have to have been paying them some wages during that period, or they won't qualify. And
so David, there's no hiring my wife, son, daughter for the next in claiming the subsidy. Is that what you're saying?
That's right. Yeah. So if you suddenly, hey, now that 75% is covered, yeah, I'm going to hire my wife, hire my son, hire, my nieces and nephews and everybody to come work. The government won't be covering that piece.
Or husband.
Or husband. Or again, if you want to increase the pay to yourself, same thing. Or if you were taking dividends before, you didn't pay yourself, you're just like, well, I'm going to flip. I used to just do a dividend. Now I'm going to start taking a salary for myself. Then you again, doesn't work, unfortunately.
So I'm going to cut you off just for a second here. There's a lot of questions coming out here saying, when paying commissions, we pay them out at the end of the month or maybe the next month. How can we break them out in each week period? And I know Justin's coming up next, and he's going to go over that answer for you guys. I just wanted to, there's like about 8 different questions coming in with the same thing.
Yeah, and you can see the example Justin walks through, but that's where you do run into a bit of an issue of where you may want to also delay your claims. You may have to delay your claim until you've made the actual payment for a particular month. Number 7 probably doesn't occur much, but can I claim the wage subsidy twice if I'm eligible employees employed in 2 or more employers? So if you have multiple companies and maybe you have some employees, maybe managers managing 2 stores, and you pay them out of 2 different places, well, you can claim them twice, but the total amount claimed can't be more than the maximum. So you can't claim, the full amount in one, full amount in another, or any dollars more than the maximum than the 847. So you're still capped to the 847. You can't kind of double up on that employee. And then the final one there is the wage subsidy considered taxable income. The answer is yes, just like other government grants, it's considered income. So obviously it'll offset your your wage expenses.
David, are paid co-ops or interns eligible for this?
If they're paid, yes, they'd be eligible as long as they're not being covered by some other government program. So that's where you have to watch out. If they're being covered under some of the other programs, then they may not be.
Even if we didn't pay them in January and February, and just they started in March or April for that matter?
Yeah, so you can hire new employees. So again, as long as they're arm's length employees, you can hire. So again, you can't hire your spouse, like we said, or your son. But if you want to hire a brand new employee, you can hire a brand new employee and then start claiming them subsequently.
One more question for you: is baseline remuneration calculated on a cash basis or respective week basis? I think you guys just went over that one, and that's some new stuff coming out.
Yeah, so that was the in respect of. So that's not the cash basis, it's in respect of. So again, that's where you take the say commissions in paid in March, but they actually relate to the sales in February. Well, those are part of your February remuneration because it's in respect of February. Justin's going to.
Yeah, one more thing here. How do you correct an incorrect claim?
Good question. The answer is at this point you can't. The system is not set up to handle adjustments or amendments or anything like that. So I guess it depends on how bad the issue is or how bad the error is on your claim. So essentially, again, if it was really far off, you could decide to do that. What it's going to do. Like essentially the way what CRA has said, if you were trying to amend it or redo it, it's going to show up in CRA's system as a double claim, so it's going to immediately be flagged and sent off to an auditor, and then it'll have to go through that process. So you could do it, but you probably won't be getting your money for a while because now an auditor has to go through it, and you'll have to explain to the auditor, hey, this is a mistake I made, and so please throw out claim number 1 and process claim number 2. And they'll look at it. So it's possible. Again, if the error is big enough, you may want to do that, but it definitely will really slow down the timing of when you get that cash.
One more here, David. Mechanics paid on sold hours. This is quite common. We take the total at the end of the month and pay them out. So would that be averaged over the weeks, or how would you go about that?
Yeah, again, it comes back to, say, a consistent and reasonable basis with some of this stuff. So it depends on your systems and what makes the most sense. So I think taking if it relates to the whole month, taking a pro rata divided by 4, so to speak, and one quarter is each week, would make some sense, again, depending how the month fell. That makes some sense to me. As long as you keep doing that on a consistent basis, then that's very easy to defend and explain to CRA. If you had detailed stuff and you wanted to, and you could do it easy enough on the actual hours, figure out how much hours they worked in a particular week, then you could break it down to that level. Again, the key is consistency, so you're not changing, doing it one way for one claim and another way for another claim. Just be consistent.
So I can't use my one employee that works really hard for 2 weeks and just do the 2 weeks for him, and the other employee who just works average for the month, and I can't do back and forth for each employee. Is that what you're saying?
Well, I think two things. One, you have to treat all the employees the same. So I wouldn't be, you can't pick one employee and treat and calculate his one way and the other employee a different way. And then secondly, again, between claiming periods, so the claim number 1 you make, claim number 2, and all the subsequent claims should be on the same basis, not flip-flopping how you're treating it.
Thanks, David.
I think Justin's going to walk through some examples now.
Thanks, David. And Chan, I think that was a pretty timely question there in terms of, hey, what if I filed my application incorrectly? And I'll tell you right now, I'm actually seeing an alarming number of applications that I've looked at after the fact, where clients are, people are reaching out saying, hey, can you take a look at this? This is what I filed. And I think I'm seeing an alarming number of applications that are just completely incorrect. And I'll try to illustrate some examples here. And one thing I want to stress for everybody on the call here is, I think, you got to be really patient, and I think you've got to really understand these rules cold. I think you've really got to, the formula that Nick went through, I think you've got to really understand, hey, how is this actually calculated? It's not that easy, but the more that you understand how the wage subsidy is calculated, it's going to benefit you. And these 3 examples that I picked here, I really, really would encourage you to again, understand these cold, because I actually think there's a tremendous amount of strategy when you're looking to make an application for this wage subsidy, right? So a lot of people are jumping the gun, making an application, great, I'm going to get my money right away. They may see down the road that, they may have chosen something incorrectly, or as Nick put it, once you choose an approach, you're stuck with that approach for the rest of the 3 periods. And again, Nick alluded to the fact that they have the ability to extend this legislation and the subsidy until September. What that could mean for you is that if you strategically pick the right approach in how you're comparing your revenues now, i.e. not rushing for the wage subsidy, that can benefit you down the road if they were to extend this program into periods 4, 5, and 6. So can't stress that enough. So take that as a point going forward in terms of the timing of when you make your application. Now let's look at this first example here. I want to illustrate this example. This is for a company that normally prepares their revenues and financial statements on a consolidated basis. So normally prepares consolidated financial statements. So if you look at the aggregate of both companies' revenue, it's $2 million for the period of March 2019. And when they compare it to the period of March 2020, the aggregate revenues is $1.8 million. Well, that's a 10% decline. And as Nick pointed out for us, you need a 15% decline in the period of March to qualify for the subsidy. So in this case, you may, if you're on the call and this applies to you, you may say, hey, well, I normally prepare my financial statements on a consolidated basis. Too bad, I don't apply, I'm going to move on. Well, if you look at some of the elections available, you can file an election under this subsection that I've noted on the slide to calculate the revenues on an entity-by-entity basis. Again, once you make this election, you have to continue to calculate revenues on an entity-by-entity basis for the duration of the period. But looking at this case here, if you were to make that election, Corporation B's revenue compared from March 2020 to March 2019 clearly declined by more than 15%, i.e. 20%, and Company B would be eligible for the wage subsidy in this example. I'm going to give you another example. Again, Nick had touched on this as well. This example is with regards to an affiliated group. So similar situation, I have Mr. A and Mrs. A. They each own one of the corporations in the group. Again, if I look at this one on an entity-by-entity basis, because in this case, let's assume Mr. A and Mrs. A don't calculate their revenues on a consolidated basis, so therefore they cannot file under the previous method. If I look at this on an entity-by-entity basis, Corporation A that Mr. A owns didn't have a reduction in revenues from March 2020 to March 2019. And again, on the surface, if you're rushing through this, okay, Mr. A is not going to file the claim for the wage subsidy in this situation. Again, Mrs. A's revenue declined from 200,000 to 100,000. So Mrs. A meets the test. But now, because they're affiliated entities, again, that's a very technical tax concept. It's not the same as association. So don't get confused by saying, okay, I'm associated, I'm good to go. The term affiliated is kind of rarely used or rarely used by tax practitioners other than really looking at loss consolidation strategies. But again, because these two entities are affiliated, they can file this election in order to calculate their revenues on a consolidated basis. And as you can see from this illustration, on a consolidated basis, both Corporation A and B, the revenues are down by 25%, which is more than the 15%, which means both entities can file a separate claim for the wage subsidy. Again, tremendous amount of strategy when looking at how to file these applications for your group of companies. Let's look at this example. This pertains to the non-arm's length or management fee, or kind of, in certain circumstances, the paymaster example that Nick referenced. So this is a situation where, again, I don't normally prepare consolidated financial statements. Maybe I'm not affiliated, or let's just say I am affiliated, but in a lot of cases we're seeing many entities in a group are down with regards to their sales. But if I file on an affiliated consolidated basis, maybe I have a company who sells, fleets of vehicles. Well, in those cases, maybe those entities are pulling the revenues up on a consolidated basis, so that if I try to file on an affiliated basis, on a consolidated basis, to take into account my paymaster corporation, maybe I don't meet the revenue decline. These specific elections that are available to your group of companies, they're there to help you. I think that the CRA is saying a lot of companies are hurting right now. We want to make these rules as flexible as possible, so that if you did meet the revenue decline, that they've have as guidelines, the 15% or the 30%, they want to make it as flexible as possible for you to be able to obtain the wage subsidy. So again, in this example, I've got a situation where I have a management company where most of my payrolls are paid, most of my employees are paid out of. The management company charges management fees amongst the associated group of companies. Well, when I look at management companies' revenues on an entity-by-entity basis, they're not down. So again, on the surface, you may say, oh, management co doesn't qualify for the wage subsidy. Most of my employees are paid out of management co. You know what? Should you just stop and move on? Well, absolutely not. There's another election under this subsection that you can make where effectively what you're doing, and I'm not going to read this line by line, all three of these examples are listed on the CRA website that you can take a look at in more detail. But effectively what you can do for this non-arm's length corporation is look at a weighted average of the revenue decline of all of the companies that it charges management fees to among its group of companies. One key point with this election, you can only make this election if the management company charging the revenues earns all or substantially all of its revenues from companies with which it does not deal at arm's length. From a tax perspective, all or substantially all means 90% or more. So, if management co and payroll co only charges or earns 50% of its revenues from non-arm's length sources, in that case, it's not all or substantially all. And in that case, you cannot file this election. So pay close attention there, and pay close attention to some of these elections where, again, why it's significant is you've got to look down the road. You want to maximize your ability to benefit from this wage subsidy for all of the 3 periods and potentially period 4, 5, and 6. So I can't stress this enough in terms of considering which of these options may benefit you the most before you file your election. Now I want to take a little bit of time here and run through some examples with the actual wage subsidy calculation Excel spreadsheet that the CRA has released on their website. Now again, in a lot of cases, this has been provided by the CRA. It's not mandatory that you use this election form. So it's not mandatory, I would highly recommend that you use this version of their spreadsheet. Also note at the top of the spreadsheet here, they've got different versions. We've noticed a lot of errors on the other versions of the CRA spreadsheet, and I'm going to point out some anomalies that still exist in this version and I don't think are going to be fixed that can really, really cause you a lot of problems when filing your wage subsidy claim. So always keep in mind to take a look for the most recent version of the spreadsheet that's available on the CRA's website. You'll notice here a claiming period. So really straightforward, select your claiming period. We're going to look at the first claiming period being between the periods of March 15th and April 11th. There are different tabs on the bottom of the spreadsheet. I'm not going to go through each one, but I'm going to go through them at a very high level. The batch, the batch tab is not bad, but I'm not recommending many clients look at this tab when filing their wage subsidy. This batch tab, in my mind, would be very beneficial for, let's just say, a smaller company that has 10 employees, and each of the employees were not laid off and earn more than $1,129 per week. In a case like this, simply what you would do with this batch tab, I have 10 employees, they each made more than $1,129 per week. What was my total payroll in that period? Let's just say, for argument's sake, it was $180,000. Automatically, what is this spreadsheet doing on a batch basis? Each employee is entitled to the max subsidy, being $847 a week. That's what's calculating the $33,880. Again, I don't love this batch version. I would only use it in that one simple example. And again, I also don't love this version of the batch because down the road, it's very likely that the CRA is going to ask for support for your wage subsidy. Support to claim your wage subsidy. Here you're just putting in a 10 and the total wages paid, which is all the information you need to file for the wage subsidy. But down the road, when they audit you, you're not going to have the information handy. There's a biweekly tab as well.
So just on that, so what you're saying is, if you got a small company, everybody makes more than $58,000 a year, this is the easiest it gets, right?
Simple as it gets, right there. Right. Simple as it gets.
But if they don't make over $58,000, that's when this falls down, this batch.
Absolutely. And I would imagine for most people on this call, you're not going to use the batch formula. I wanted to point it out in terms of what it is and when you may consider using it. Again, I won't spend too much time on the biweekly tab in the interest of time because we're getting close to 1 o'clock here. The biweekly tab, again, is okay. I'm not a big fan of the biweekly tab unless your pay periods match up exactly to the pay periods they've lined up here, March 15th to March 28th, for all of your employees. Then you may consider this to be a very easy tab to use. Again, in my opinion, only if your pay periods line up exactly to what they've listed here. The most common tab that I think people are going to look at is going to be, the most common tab that I think people will look at will be this 52-week tab. Okay, so I think this is the tab that, this is the tab that we're going to look at in terms of, where we'd recommend, you start with to claim the wage subsidy. So in the first column here, this is just where you're going to put the employee's name. And in this example, we're going to look at an employee who made $78,000 a year. Okay, so an employee made $78,000 a year. Okay. The next column says, was this employee at arm's length? In most cases, that's going to be yes. Okay, so in most cases there, that example there is going to be yes. And one sec there, sorry, that example is going to be yes. Then you're going to calculate what was my average weekly pay. This is your baseline remuneration period that Nick mentioned. This is your $1,500 a week. That was what they made on average between January 1st and March 15th. Let's assume this employee wasn't laid off. Very simple. They made $1,500 in each of these weeks. So this is a very simple way to fill out this tab for a salaried employee who was not laid off and the salary was not reduced. Okay, very, very simple example. You can see here they're eligible for the wage subsidy in each of the 4 weeks, and the calculator calculates how much they're eligible for on an aggregate basis. Let's look at an employee who made $52,000 a year. Again, they deal at arm's length, so they made $1,000 a week. Want to just highlight a couple small differences here. Again, this employee was not laid off, So it's very easy to calculate their average weekly earnings. Again, look at the difference here. Why I mentioned on the outset that you've got to really understand the formula. You may say, hold on, I thought I'm supposed to get $847 a week. Well, the calculation, again, is limited to the amount of the remuneration paid in respect of that week, so 75% of the amount, also compared against the baseline remuneration period. So for this employee, you're only going to get $750 a week. Want to go through another example. This employee started at $78,000, and you reduced their salary to $44,000 when the crisis started. Okay, so their baseline remuneration was $1,500 a week. Again, in weeks 1 and 2, you reduced their salary because of the crisis that was going on in the economy. Look at this interesting example here. So in this example with this employee, this is a situation where you can actually get a 100% wage subsidy for what you are paying to this specific employee. Very, very important. Why is that? Again, it's a matter of understanding the calculation. It's a matter of the baseline remuneration in that it was over the $1,129 a week. And this goes back to the situation where, hey, how can I, give me some examples of, you know, do I have to top the employee up by the remaining 25%? So in this case here, you know, you clearly don't. It's not mandated by the legislation. This is an example of receiving a 100% subsidy. Let's look at this example. This is a significant example because this is where I think everybody seems to be getting tripped up. This employee earns $78,000 a year. So the baseline remuneration was $1,500 a week. They were paid for weeks 1 and week 2, $1,500 a week for weeks 1 and week 2. But like most organizations, and I would imagine, like many dealers on this call, this employee was laid off sometime during week 2. So I'm going to pull up the calendar here. Okay. So what's very, very critical, and what I think was clarified with examples that the CRA released on their website either last night or this morning, we noticed them this morning, this is a function of an eligible employee. An eligible employee is somebody, as long as they were not without remuneration for 14 or more consecutive days within an eligible period. So if you have an employee who is laid off sometime during the first 2 weeks of period 1, so March 15th till March 28th, what that means is they were without remuneration for 14 or more consecutive days in period 1. Look at what happens on the spreadsheet. You've filled out this spreadsheet properly. I can't tell you how many examples I've seen where this appears to be calculated incorrect. The spreadsheet still says for this employee, you're entitled to a $1,700 wage subsidy. Why I think, you know, you may say, hey, you know, and this is the comment we got from a lot of clients was, this employee earned wages in week 1 and week 2, but I paid them in week 3. So I paid them in week 3, right? So I paid them in week 3, but so in their mind, they're saying they were not without remuneration for 14 or more consecutive days because I paid them in week 3. Seems to make sense on the surface, except everything that CRA seems to be clarifying and how the legislation reads. I'll read it for you right now. It says, eligible remuneration paid to the eligible employee in respect of that week. So very, very critical point. I can't stress this enough. Eligible in respect of that week. That's read right from the legislation, meaning what did that employee earn on that day? A lot of questions we heard in terms of a commission employee, a sales employee. What do I do with their commissions? So I understand and I respect the fact that, you know, that's not something easy for you to calculate. It's not easy. But in my mind, you know, depending on your payroll report, you're going to have to think of it like, what did that person earn for that day? So for a mechanic, right, let's just say their baseline remuneration was $1,200 for argument's sake. Well, what did they make in week 1, right? So do you have time cards? How do they submit their time? When I look at a pay stub for one of our employees, they're paid on April 30th. They were paid on April 30th for the period between April 16th and April 30th. So there you go. They're paid on April 30th, and it clearly identifies what period was that person paid for. So this mechanic here made $750 in week 1. They made $850 in week 2. they did work a couple days in week 3 because some people needed their snow tires changed, made $250 in week 3, and he made $500 in week 4. Again, look at the mechanics of the calculation. So how do we calculate wages for a mechanic or commission salesperson? From what the guidelines that CRA has released as early as today, there are 2 examples on their website. I believe it's example 16 and example 17. You've got to look at wages earned in respect of a period, not when the employee received the cash. And I'll try to clarify that with the following example, okay? Let's say
Justin, there's a lot of questions coming in here because the days don't automatically align to when they get paid, right? Or not paid, but when they accrue the payment, right? So we're seeing that March 15th, March 21st, March 22nd to 28th, but they might be paid semi-monthly, right? So now we've got March 15th to March 31st. What do we do with those other 3 days? Like, how do we figure that out? Is it prorated or how do we do that?
Well, yeah, so good question. And I think they clarified that this morning, and I think it was Nick who mentioned it. So in order to actually be eligible in order to be eligible to make a claim, wages have to be paid. So there shouldn't be any of this accrual talk because the wages have to be paid, so not accrued. So I think that's pretty clear. They have to be paid. So that means in a lot of cases, for period one ended on April 11th, right? So the wage subsidy should include all wages earned until April 11th. All wages earned until April 11th, not what I paid people. So it's very likely that for the period of April 11th, right, this employee might not have got paid until, I'm going to give you 2 examples. They might not have got paid until April 30th, or if you're calculating commissions for a sales employee, right, and you want to determine how much they earned in week 4, and you don't pay them until May 15th, according to what was released this morning, you can't even file the wage subsidy until May 15th because that employee has not been paid for the wages they earned in week 4 until May 15th. So wages have to be paid, and in my mind, this makes things actually a lot clearer, right? Because like, when did your employees earn their commission, right? So I get it on a sales commission individual. Do you have to go back to the day? That becomes maybe a little bit excessive. Okay, if you can go back to the week, that's much more beneficial. And as David mentioned, remain consistent in your approach throughout. Cannot stress that enough. Remain consistent in your approach throughout. But keep those 2 points in mind. Wages earned, right? Wages earned that have to be paid. So somebody working during the week of April 5th till April 11th earned money. When did you pay them, right? Those are the criteria that you have to look at when calculating the subsidy. But the big example is this example. Like I can't tell you how many times I've looked at applications, and we're doing a lot of work reviewing applications, and we're doing a lot of work even after the fact where I've said, hey, I filed this application, and look at it. Well, no, the CRA provided Excel spreadsheet, Justin, tells me that I'm getting $1,694. You're telling me I'm not. And I'm saying, yeah, I'm telling you that based on the legislation, as it reads right now, you're not entitled to this $1,700. And the question becomes, so Justin,
I'm going to stop you there. So what do we do if we make that mistake and we've already filed? Can I adjust the next claim, or how does, I know we talked a little bit about that.
Yeah. And honestly, Shane, I don't think we're there yet, right? And I think that we will definitely see guidance from the Canada Revenue Agency come out shortly in terms of what to do, because I guarantee you there's going to be thousands of applications that are done incorrectly. Okay, so what I would probably recommend is, some people are suggesting, do you short period 2? And I'm if you short period 2, what if they make you pay back period 1 and you just filed period 2 incorrectly and you don't get it? What I probably would recommend is, if you did make a mistake, right, I would still recommend filing period 2 appropriately, number 1. Number 2, I don't think you're going to be able to, as the legislation stands now, change an election. So I don't think, if you notice in one of these examples that says, ooh, I should have maybe looked at, the consolidated approach or not, I don't think you're going to be able to go back on an election. But if you know you're wrong right off the bat, what I probably would suggest is pay the money back to the CRA as soon as possible. Right? Put your hand up, pay the money back. Very, very tough for them to come down on you from a punitive perspective. Hey, I made an honest mistake. Hey, I used your spreadsheet, CRA, that actually gave me the wrong number as it's spitting out here. There is a lot of confusion on wages earned versus wages paid. Tremendous amount of confusion in the sense that, that example just came out either last night or this morning. So, I wouldn't think, I'm going to jail, my name's going to be published. I think that's an honest mistake. Okay, so I think that's an honest mistake. Consult with your advisor. My inkling right now is, if you know you made a mistake, let's recalculate it. Make sure we recalculated it properly. Maybe even wait a little bit for any additional clarification on some of these points, because there's a lot of points that need to be clarified. Put your hand up, pay the money back to the CRA, right? Hard to argue anything wrong with that in that example.
Justin, can you go through an example here? And I know a lot of dealers, they've got kids in university and they haven't been working, right? Like they might have worked during Christmas holidays, but now they're back at work. How does that work? Like they might have worked January 1st, 2nd, 3rd, 4th before they went back to university. They went to university, now they're back home.
Yep. So again, you're going to calculate the baseline remuneration calculation that kind of Nick and Dave mentioned. So that is going to be a function and a key function for all non-arm's length employees. So you can't just arbitrarily say, well, right now this individual's making $500 a week, so I'm going to put $500 there. And then, okay, they're working sporadically. It's my son or daughter, and I paid them $500 a week. Because this is the issue with that. Non-arm's length employees are eligible for the subsidy, provided they were employed between January 1st and March 15th, and provided you properly calculate their baseline remuneration. So again, right now, if you just arbitrarily put in the $500 here that I've highlighted in this cell, it's going to assume that your son or daughter is entitled to a $1,500 wage subsidy. But if the reality of the baseline remuneration calculation is, the average they earned a week is $50, well, all of a sudden your $1,500 goes down to $150. So very common mistake that people can make.
So Justin, if my kid is getting his doctorate, he's worked in my dealership the last 7 or 6 summers, right? But didn't work from January till April. Every year, but from May 1st all the way to September 30th, they've worked in the dealership, right?
Yep.
Is it still zero?
Zero. It's zero. If they do not have any remuneration earned during the baseline period, the answer is zero. And I know we're going a bit over there, Shane. So if you want to, I'll kind of sum it up there. The key points I wanted to hit on again were this highlighted column, without remuneration for 14 or more consecutive days, quite possibly the biggest error that we're seeing. So I want to hit on that, but again, leave some time for other questions. I know we've gone a little bit over here.
Okay, Justin. So if someone worked until March 31st and then laid off, they would qualify because the days not worked is less than 14, correct?
So if they worked until March 31st, you're absolutely correct. So I've got the calendar there. They worked until March 31st. You're absolutely correct. Now, so another reason why people are jumping the gun, to apply, hey, I got this subsidy, I got to apply right away. I mean, unless you're about to go bankrupt and you immediately need this cash, I can't stress enough how much I'd wait to make sure you are 100% sure this is filled out properly. Because, Shane, let's look at that. So that example is clear, Shane. That example is clear. If you worked until March 31st, that is not more than 14 consecutive days, right? Count them, 1 to 11. It's 11 days. That means you're good. Now, let's go back to this example that I highlighted above. $1,500 in the baseline remuneration period. Great. $1,500 in week 1. Great. $1,500 in week 2. Great. So now, do we just stop and do we just say, okay, you know what? I'm foregoing a $1,700 wage subsidy for that period. The CRA has provided this provision that allows you to retroactively hire employees. So could you, now again, in order for you to qualify for the retroactive pay, what that means is you have to actually pay them. You can't just say, hey, I'm going to pay them, so I'm just going to, on my spreadsheet put $500 and, I'll pay them sometime in the summer when I get the subsidy. That doesn't work. Wages have to be paid. But does that mean right now I am not entitled to the subsidy? If I retroactively pay my employee for that period, let's see how much I'm entitled to. Perhaps maybe I'm going to consider looking at reducing their wages to the $44,000 a year, because guess what? That gets you 100% subsidy. What does that mean? That means as an organization, you're entitled to the wage subsidy now for this employee for $3,388. But, and again, Nick mentioned this, be very careful here, because if you're retroactively paying employees, very likely that these employees have already registered for the CEWS. And if they registered for the CEWS and receive a retroactive payment for this period, they're very likely going to have to repay the CEWS. So, you've just paid the employee $1,500, $1,600, right, to benefit yourself to the tune of $3,388. That employee received $1,500, but if you're not going to continue paying them, they may be out more money. So a lot of complexities there, right? The CEWS is on an employee level. We've talked about this a lot, but again, later this year, early next year, when that employee gets asked for the CEWS money back, is he going to be mad at you a little bit because you filed for this subsidy? So you want to be very certain of the implications in this instance. But look at the money. Look at the amount of money you can get back, right? And this is just one employee.
Justin, I got another one here, and if we hire somebody right now, there was no baseline. Now they're earning a salary, whether it be $1,000 a week or $5,000 a week.
Yeah.
Is the money they earn eligible?
Yep, you're good, because look at this. If you're an arm's length employee, it's a greater of, lesser of calculation, again, that Nick went through, that again, I can't stress this enough. Familiarize yourself with the calculation. Familiarize yourself with the calculation. For arm's length employee, the amount of their subsidy is not a function. It does not always have to be a function of the baseline remuneration that they receive. Okay, so it can be, it does not have to be. It's more of an issue for arm's length employees when you're reducing salary. That's when it becomes a little bit more of an issue. So new employees can be eligible for the subsidy. There's a great example on the CRA website that can also confirm that for you.
So Justin, you're saying arm's length. Now, do nephews, nieces, those classify as arm's length?
You got to be very careful with the definition, and it really depends on the structure and family trust. So it's tough to answer that, right? In terms of for an entire group, you've got to be very careful with the relationships in a situation like that, because you'd be surprised at how complex structures can get and how easily you can get tripped up between who may or may not be a beneficiary of a trust. So really tough to comment on that, Shane. Just to avoid having like a definitive answer, in that case.
Got another one here for you. For the retroactive pay for employees, do you have to retroactively pay back to the start of the claiming period, or can you choose another date to just get the employees into the claiming period eligibility?
Yep, as far as I know, and then Nick and Dave jump in case you want here too as well, but as far as I know, you do not have to go back to the first date in the period. So it's your choice when you want to retroactively pay them until, as far as I know. But I
can confirm that too. That's my understanding as well.
Great, thanks, Nick. Yeah, thank you.
So right now, that's all the questions that I think there is. If I skip somebody's question, please ask it.
I just got a couple quick ones.
Okay.
I think you buzzed over one, maybe a little bit incorrectly here, because there was a gentleman there was somebody asking if they paid somebody on Jan 1, would they be eligible, like a non-arm's length person, something on Jan 1, would they be eligible for the subsidy? Yeah, but it's going to be a pretty small amount, because their average weekly baseline remuneration is going to be a pretty small number. It would appear in that case, and then you have to be careful with respect to how much you're paying them. And then the only other one, I really wanted to clarify that earlier question we had about gross revenue versus total sales. The definition of revenue is the inflow of cash, receivables, or other consideration arising in the course of the ordinary activities. It is not the cash outflow. You cannot reduce the amount that you're receiving by any number. So, like I said, outlays and expenses cannot reduce it. So the cost of a vehicle should not be reducing the claim that you're making, or the revenue that you're making there.
One more here, guys. The first claim period is from March 15th to April 11th. We pay monthly bonuses. Are you suggesting that we would take 17 days worth of the March bonus and 11 days worth of the April bonus, prorated when we're converting to average weekly earnings?
As somewhat complicated as that sounds, and a great question, that's what you know. And again, take a look at the example on the CRA's website. It's example 16 and 17, but that is exactly what they're trying to get you to do here. Wages earned in respect of that period. But now, you know, the question you got to ask yourself there is, how much does that actually matter for your claim? Like, how much of a bonus is it? Like, is there regular base salary? Like, if I look at this line here, and you're saying, okay, this employee earned a wage of $1,500 in this week. I don't care if they're going to get a $50,000 bonus for the month of April for this, because you're already at the max, right? So you got to see how much does it actually matter for that employee. And again, in your example there, so the employee is going to get a bonus for the month of April, paid in May. Technically, you cannot apply until the bonus is paid in May, because you want to encompass the wages for this specific period that have to be paid.
So Justin, just to put it in the dealer's perspective, what they're looking at likely is these commission sales guys, they're making minimum wage for the most part, plus commissions. Maybe March 15th to March 21st, they actually had some sales, right? The next 3 weeks, nothing. They might have been just getting their salary. So they're looking to see, should we average the whole thing, or would it just be based on the week? Do you see what I'm saying?
Yeah, tough one there, right? To maybe like definitively comment on, because you got to remain consistent, right? And like, go ahead.
I was going to say, I mean, I think that was kind of one I answered earlier. It depends on what you have the details for, right? Like if you have enough data to actually say how much of the bonus relates to March 15th to March 21st of that week, then sure, you could actually do it by the week. If you don't have that level of detail, then you have to simplify and say, well, the March bonus was $3,000 divided by 30 days or 31 days, and how many days fell in the week 1 period, week 2 period. Do it that way. So it depends on the data you have and what you can compile together. So when CRA asks, they say, how did you come up with that number? Here's how I came up with the number.
Guys, I know we're over time here, but I know there's still a lot of questions coming in. So if people want to drop off, you're welcome to. We're just going to go over questions now, but we're going to stick on for a little bit here to go over the questions that we have. All this stuff will be posted on BDO's COVID Hub located on our website. And if you have specific questions, please reach out to your local partner or email one of us, and we'll be happy if you guys have to go right now. But we will be on here for a little bit going over the next couple questions. Speaking of which, the questions, for an employee who is receiving pay continuation until their notice period is complete, is that eligible remuneration?
I don't know. I would think so. If you're stuck paying them for a period of time because of the notice period, to me that would still fall within the eligible remuneration. Because the flip side is I don't think they'd be able to apply for their CERB until after that period, because they're still receiving remuneration for that period. So yeah, I would say likely that qualifies.
Yeah, yes, and based on the wording in the definition in the definitions, paid in respect of a period. Well, they were paid in respect of that period, and therefore, legislatively, it seems to meet the definition.
And then the only other point to add on that one, for those employees, right, we didn't get into this too much with this calculator here, right, but if you're paying someone and they're not working, so if you're paying an employee literally to sit at home I like to give the Air Canada example, right? Air Canada, as soon as this came out, we're going to rehire whatever 17,000 employees. These specific employees who do not work at all for a single week, you're also eligible for that additional top-up, the CPP, EI, QPP top-up. Okay, so that's another one that don't confuse yourself when you're filling out the wage subsidy application form. When they ask you for CPP, that's not your CPP paid for all employees during that period. I've seen that probably 6 times now, right? That's only that adds to your subsidy, and it's only for these specific employees who did not work at all, but you were paying their wages for a specific week.
So for semi-monthly pay, would we be spreading their pay over the period outlined in the sheet, or would we be basing it on a 5-day work week or a 7-day work week?
Like, I think there you just want to remain consistent, right? Like, I mean, like in either case, I think you probably would get to a similar situation, I would think, right? Because you're going to remain consistent in either approach, but you're going to want to kind of work backwards into what did that employee earn for that week, right? So, I mean, if they only ever work on a 5-day work week, maybe you take that approach. And again, as long as you remain consistent, in there, I wouldn't really see any issues with that. Again, as long as you're consistent.
So if I use the biweekly, I know you're against the biweekly spreadsheet here, Justin, but we got a question in here. If I use the biweekly spreadsheet for period 1, can I switch to the weekly spreadsheet for period 2 or keep them the same?
I don't think there's any, you're not mandated to use anything here, right? So this is not like you're not mandated to use the spreadsheet. You're not mandated to use anything. You just got to get the calculation right. So my worry there is, you know, I don't know why you would do that. To me, that seems more complicated than just using the weekly tab. You're just going to want to make very certain that you're not doubling up, right, on any of the wages earned. Because, like, I mean, in the biweekly tab, you know, because to me that could cause a bit of confusion because, you know, you're going to pull an amount from this tab and pull an amount from the 52-week tab, you know, but the weeks are the same, right? So I don't know. There's probably nothing against you doing that, right? Because week 1 is March 15th to March 21st. Week 2 is March 22nd to March 28th. You look at the biweekly tab; it's March 15th to March 28th, right? To me, that would create some confusion, in my opinion. But you know, whatever is best for you. Again, can't stress it enough. Remain consistent with whatever you do.
Thanks, Justin.
I think what he's getting at is maybe the person didn't like the fact that they submitted under one method and then changed, and now they want to go to the weekly method because you were raving about it so much. Somebody asked a question about if a salesperson has earned no commission during a period, but they were paid. We use the paid amount for the claim, ? The answer is no, because they were not paid in respect of the period then. So that would be the issue there, unless I misinterpreted that, guys. I don't know if you disagree with me there.
Justin.
Okay, go ahead.
Sorry. Justin, one of the things we've talked about several times just offline is just the logistics behind this. If you can go back to week 52, like the weekly one, just the logistics behind, because we know, well, we're pretty certain that CRA is going to come audit this stuff. What would you put into this spreadsheet so that you have it when they come in? Like, would you be tying stuff into your payroll ledger, that ADP rating, whatever one you're using, and SIN numbers? Like, what do you put in beside this template? I know this template's for that, but just to make it easier for CRA when they come in.
Yeah, that's probably a really good question, Shane. Like, I don't know, we're kind of recommending like build an audit file, right? So build an audit file for everything. How do you calculate your revenues? Like, you're going to want to give this to CRA on a silver platter, and like, why not just do it now? Like, why go back and do this in 3, 4, 5, 3 years from now, right? Like, they can come audit these, you know, presumably for up to 3 years, right? So why not put this together now? So to that point, Shane, like, I'd have everything. Like, probably handy to include the SIN numbers for your employees, perhaps in this tab, because I think there's some communication on their website that you're likely going to have to report the wage subsidy for each employee on their T4 in some way, shape, or form, eh?
That was one of the questions that came in, and that someone was asking about that, and the answer is yes. They are going to make you put it, so the employee won't be taxable on it, but it'll go in one of those other other boxes that goes on the T4, a description piece. So you will need to know, that John Smith, you got a $3,000 of wage subsidy related to John Smith, and that'll have to show up on his T4. I think basically what CRA is looking to do is match that up with the CERB, again, to see that they're, again, you're not double claiming and various other things, because that way they'll know, okay, how much, if anything, did we pay that person for their personal benefit for the CERB, and then how much did the company claim on that person, and then that way they have an ability to match. So I think that's why they want to see this on the T4 slip. So that's, as Justin said, you put the SIN number on the side, and it'll help facilitate the T4 filing when you get there.
And then the only other thing I would maybe say to add in your little reconciliation is, like, I mean, if you put yourself in the auditor's shoes, right? So they're giving you $847, right? So they're giving you $847 a week per employee. So in order to get that, like, what do you have to prove? Well, you have to prove that they made at least $11.29 in the baseline period. So how are you going to prove that, right? So just, show your calculation. How do you prove that? And then you're going to have to prove them that they earned at least this amount in each of the respective weeks. So again, like, if you're an auditor, if you're a CRA auditor, how would you prove that to somebody? That's the approach I would take. So, a lot of loose guidelines on this right now, but put yourself in their shoes. What would be sufficient for you to prove that you paid Justin, he earned $1,500 a week in weeks 1 to week 4, and in a lot of cases I've seen, I really like them. There's another tab here. So a lot of payroll companies, you can download the data, and maybe you build your file and say, okay, here's my data in this tab, and maybe you build some sort of model or formula that just even pulls the data from the tab, right? A lot of creative things you can do with the Excel program, but just put yourself in CRA shoes and say, hey, how am I going to support this to the government if they come to ask?
Okay, guys, I got several questions here yet. We laid off an employee for more than 14 days in March, and when they came back in April, we paid them a bonus that was for the month of March. So the bonus there is for the time that they laid them off. The bonus portion would be entered into the March weeks. Is that correct?
Correct. If it's in respect to the March, then you'd put it into the March weeks.
In the frequently asked questions for this, I believe 28 and 29, it states that the amount the company receives will be noted on the employee's T4 for 2020.
That was the one I picked up a minute ago, Shane. Yeah.
And just to add, we don't know where it's going to go in the T4 yet. We don't have that guidance, but presumably it's going to be something that comes out between now and next year when we start filing T4s.
Yeah, they'll create a new box number or something.
Another one, any claim submitted will have the 10% wage subsidy automatically deducted, or we have to do that ourselves?
So you do it when you're making the claim process. That was back on the slides. I went through, line A, B, D, all the different lines. One of the lines is the 10% temporary wage subsidy reduction. So you'd put in there, again, if you received $10,000 for that, you'd put in $10,000 in that line. So then when it comes to the automatic calculation at the bottom, that $10,000 has already been taken off there.
Hey, Dave, I want to clarify on this one. You said received, but I think it's receivable because it's not whether or not they received the money yet, if they were eligible to receive it. And technically, they can make a claim up until the end of the year here to do that. So can you clarify that if they haven't actually received that 10%, that you still need to put it in there?
Yeah, and kind of had mentioned when I went through it, it's, if you're entitled to it, you have to, well, in theory, you have to claim it. You get the reduction whether you claim it or not, actually. So if you're entitled to claim the 10%, you have to do the calculation and put it in there and get the reduction regardless of whether you actually even end up claiming it and receiving it.
Yeah, I can't imagine just by doing a lot of these that there will be anybody, like there might be a couple of you that are eligible for the 10%, but your taxable capital will be well into excess of $15 million.
And to be clear, CRA is not going to automatically take it off because they actually don't know yet if you're eligible for the 10%.
So if all my calculations are correct, but I claimed a period before I actually paid the employee, am I technically okay, being that it had waited to the claim? The amounts would still be the same. I just jumped the gun.
Yeah, I mean, I'd say we can't say for sure. I think CRA would probably would likely to be reasonable with it. They're not looking, you know, the purpose behind the program is to encourage people to keep others employed and to help support them. It's not to you know, be super sticky on some of these points. That being said, it's also they're really you know, they're really aware that they don't want people taking advantage of the program because then it'll look really bad from their side of things. So they're really, you know, they're concerned about people taking advantage of the program, but as long as they're within the spirit and everything else, they're likely to be very reasonable on that. So yeah, if you end up in a situation where, you know, I said you should wait until it's paid, but if you've already filed your first claim and you know, you filed it 5 days or 10 days before the actual payment, you know, the bonus payment, the commission stuff got paid, I wouldn't be too concerned when CRA showed up. Again, I do it properly for the subsequent claim. Now that you know, if CRA asks you on the first one, say, you know what, honestly, I didn't realize it. Then I attended this this great BDO webinar on May 1st, and I understood the way to do it in the future. So look, all my subsequent claims, I waited until it was paid.
Great plug, David. Great plug.
Thanks.
Hey, David, can you please clarify again what an employee at arm's length is? What if I'm an 80% majority shareholder? Does that, and I draw a salary, is that considered at arm's length?
No, if you control the company, you're non arm's length with the company. So there's some definitions, like there's some pure definitions in the Act. So again, if you control the company, you know, the spouse, kids of the person who controls the company, then you're non-arm's length with the company. You start extending beyond that, you know, you're talking about nieces and nephews and stuff. They're not in kind of the initial definition of they're guaranteed to be non-arm's length. However, the definition is expansive, and that anybody can be non-arm's length based on the facts, right? So again, if you're just bringing your nieces and nephews in because of their nieces and nephews, then they could be considered non-arm's length. So anybody can fall within that definition, if depending on how you're acting and how you deal with that person.
Thanks. This one's a little bit complicated question, but for an automotive wholesaler, the financial statements report revenue as total revenue. MSRP, less fixed retailer margin, less variable retailer margin, less retail discounts. In this case, would the total revenue be the amount to use or use gross revenue? MSRP less fixed retail margin. I think what we've said so far is it's your total revenue without costs associated with it, correct?
Yeah, qualifying revenue is from the sale of goods. It's the cash inflow or the inflow of receivables. So it would seem to me in that calculation that there are other things that could possibly be in there that you would need to normalize before you get to the right number.
Is the CERB capital calculation based on an entity basis or a related party basis? I don't know if that...
I think there may be asking about the 10% piece in what you're referring to and whether you can make that in. So again, it's on the related group. So basically here's the question for you, because it's the same qualification. You know, are you getting the small business deduction is probably question number one. If you're entitled to the small business deduction, then you're small enough to get the 10% subsidy. If your taxable capital is so large that you're not getting the small business deduction, then you're not entitled to that 10% piece. But it's separate from the CERB. There's no calculation for the CERB itself. Again, you can be a multi-billion-dollar company and still get the CERB.
So there's one more here. If we took the TWS and deducted it from the subsidy, how does that work with the net claims for each employee and reporting on their T4s? I'm thinking that's the 10% wage subsidy.
That's a 10% piece. So that comes out. that comes out on the claim itself, so it doesn't show up on this spreadsheet. It's when you submit the claim, one of the buckets you put in, like I said, would be okay. How much do we get there, and it reduces the CEWS amount that you get at the bottom. I guess to that one, I haven't really thought about that as far as the reporting thing. What makes sense to me, one of two things: you either reduce, so on the spreadsheet, if you're using this spreadsheet here to track the amount you're getting for each employee, then I would just record 65% of the amount as opposed to the 75%, because that's what you're ultimately getting. I don't know if the 10%, so as far as the T4 reporting, I don't know if the temporary wage subsidy falls on there or not. It probably does, so you may have to track that separately. But I'm not 100% sure on that. I'm not sure if Justin or Nick have any other thoughts on that.
Yeah, I think they just say on their website more details are coming. So I totally agree with Dave. Tough to say at this point. Probably just don't know. Wouldn't overthink that one, right? I wouldn't plan for that right now. Because again, the employees are not going to get taxed on the subsidy, so it's probably just more to determine if there's an overlap on the CERB. So I wouldn't overthink it right now. Definitely there'll be more guidelines on what you have to report on the T4s later throughout this year. So I wouldn't overthink that question at this point.
So guys, I think we're just about wrapping up here. I got one question for the three of you. Can one of you guys pay my cable bill so that I can get a camera up next time?
I'd prefer it if we didn't.
Yeah, I was going to say, I cut it off so we didn't have to see you.
There's one more here. In a previous conference call with CADA, we were advised that we could not claim the 10% and the 75% in the same period. You guys are saying that it is mandatory to claim the 10% and then reduce our 75% claim.
I'm not saying it's mandatory to claim the 10%. I'm just saying if you're eligible to claim the 10%, then you're only going to get 65%. So you definitely want to make a 10% claim. But don't fret, because there's I didn't reduce my payroll for that period, but I was eligible for the 10%, you can still get it in a subsequent pay period. Yeah. You can still make the claim in a subsequent pay period.
And they snuck this in late last week. They kind of just the legislation's a bit wishy-washy when you look at it, and they kind of say, no, you have to do this. I think it's just from a cash flow perspective. That's the only thing that I can think of in my mind is, because with the 10% subsidy, you're just reducing what you pay the government. So if you're eligible for that subsidy, they effectively have less cash outlay with regards to this subsidy. That's the only thing I could think of is why they made it mandatory there, but they kind of stuck that one in there late last week. So when you heard the information at the CADA webinar or whatever it was probably technically okay at that point in time. This was they change things literally almost every day here and add clarification, because as you can tell, it's very complicated. So that's probably where that came from.
Okay, I'm gonna wrap things up here. So I want to thank everybody for joining us today. Hopefully we clarified some of the questions you had regarding the wage subsidy. If there's anything that you want to look back on, this webcast again will be posted on BDO's COVID Hub located on our website. And if you have specific questions, please reach out to your local partner or email one of us, and we'd be happy to help you out. Have a great weekend, and everybody stay safe. Thank you.